Will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time, and all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is entitled Results and Accountability at the World Bank. I now recognize myself for 5 minutes to give an opening statement. I want to welcome members to our hearing today entitled Examining Results and Accountability at the World Bank. This year is especially important for the bank as Congress will be considering the 18th replenishment of the International Development Association, or IDA, the bank's lending mechanism for the world's poorest countries. Since IDA replenishments occur on a 3-year cycle, 2017 is a rare opportunity for Congress to discuss appropriate resource levels for the bank, as well as any needed reforms. As the World Bank's largest shareholder, the United States has a leading role in bank's governance. If we take that role seriously, we must hold the bank to the highest standards, demanding accountability for its projects and ensuring that it remains focused on poverty alleviation. I am concerned, however, that internal incentives at the bank may prioritize lending over producing real results. Such incentives have been criticized for literally decades, yet the bank's own evaluation office has indicated little has changed. Let's be clear. No one claims that the bank's officials will always get things right, but its incentives appear designed to elevate lending at the expense of learning from past mistakes. As the bank's independent evaluation group, or IEG, concluded in a 2014 report, quote, "This continuing push to lend increases the opportunity cost of dedicating time and effort to learning and knowledge sharing, and distorts the metrics of performance in favor of inputs and short-term outputs rather than on results and development solutions," unquote. The evaluation office added, IEG interviewees indicated that senior management should give knowledge the same status as lending in management attention, monitoring, and promotion. Well-designed incentives should focus our attention more on the lives of bank beneficiaries, not on loan amounts approved by the board. Such incentives will place more value on the poor's rights and freedoms, without which long-term economic growth is unlikely. As Nobel Prize-winning economist Angus Deaton has written, World Bank officials have long moved onto other things by the time the effects of their handiwork become visible. There is no responsibility of member country shareholders to the recipients of their aid. Indeed, the bank's projects in IDA countries have at times harmed their intended beneficiaries or emboldened regimes that are more committed to personal enrichment than they are to their citizens' futures. Today, we will learn about some of those projects and how their failures, some of which reflect lapses in basic project management, can spur improvements at the bank. Of course, the bank is not new to reform initiatives. Its recent history has seen the introduction of matrices, scorecards, frameworks, task forces, and other well-intentioned ideas. In the end, however, this committee expects to see genuine reform, not the branding of reform. Such reform will, of course, hinge on the bank's own leadership. I'm therefore concerned by reports from within the bank that senior officials may not appreciate what is at stake. In the bank's 2015 Employee Engagement Survey, a mere 38% of respondents indicated that senior management clearly communicates strategic priorities, while only 26% responded that management, quote, creates a culture of openness and trust, unquote. Only 34% of respondents had any confidence that the bank would take action on these findings. The Executive Committee of the World Bank Staff Group Association called these results, quote, sobering, humbling, embarrassing, humiliating, appalling, and a number of other adjectives that could be added to the list, end quote. If the bank is to be successful in its goal to eliminate poverty, then business as usual is not enough. The World Bank may have the best of intentions, but we must call on the bank to deliver results, not simply look for new ways to push money out the door. In addition, the bank is involved in a number of countries whose economic prospects are key for U.S. security interests. If the bank cannot design and execute projects effectively, then not only could the world be less well off, it could be less safe. I want to thank the witnesses again for testifying today, and I look forward to hearing their thoughts on how we can make the World Bank more accountable and more results-driven. The chair now recognizes the ranking member of the subcommittee, the gentlelady from Wisconsin, Gwen Moore, for 3 minutes for an opening statement.
Thank you so much, Mr. Chairman, and good morning, colleagues. I want to welcome our very distinguished panel and thank them for their time. I do see a familiar face, a former staffer of this committee, Mr. Morris. You're proof that there's life after Congress, and you inspire me. But let me jump right into it. The World Bank is the flagship development bank in the world. And it's my intention to keep it that way. As a matter of fact, as we were going over material last night, we saw testimony from former Representative John Kasich, now the governor of Ohio, who was a ranking member, of the Budget Committee, who spoke passionately on behalf of the World Bank. I consider myself as well to be a staunch advocate of the bank, its mission, and I do believe that the moral authority in the involvement of the U.S. has led to a safer and more just world. And I'm also aware of areas where the bank has fallen short. I pushed hard to get the best, most comprehensive safeguards in place for exactly the reasons that we've seen in Uganda. Doing development in economically depressed areas means almost by definition that you will operate in areas with limited judicial capacity, questionable rule of law, and a desire to get the job done that can lead to a certain kind of myopia of money. It's why a strong social and moral grounding is very critically important. I sent a letter with then Subcommittee Chairman Hussein, and without objection, I would have placed it in the record, that made quite clear my disgust for what happened surrounding the bank project in Uganda. And I've met with the bank about it since. And I get the sense that lessons learned have been lessons applied. And now we have stronger safeguards, and I'm happy about that. And I hope my Republican colleagues are pleased about that as well. In fact, I would love for our private U.S.-based institutions to mimic some of the social, environmental impacts of projects. I wish that more financial institutions were as responsive to this body as the bank has been. And even as we fund the World Bank, we back our banks, as taxpayers found that we did in 2008, 2009. If there's something that comes out of Uganda at this hearing, I hope that it is safeguards are not only important, but meticulously observed, even in the difficult position of when the pressure to finish the project is on. And I yield back my 2 seconds. I can't.
Thank you. The gentlelady yields back, and we will reserve the opportunity for the ranking member if she wants to give a 2-minute opening statement. But I'm going to go ahead and introduce the witnesses here, and we welcome the testimony first of Mr. Sasha Chavkin, who was the lead reporter for ICIJ's Evicted and Abandoned investigation, which analyzed bank projects across the world and their unintended impact on the poor. He has previously written for ProPublica, Columbia Journalism Review, and the New York World. Mr. Chavkin has reported from countries including Ethiopia, South Sudan, Honduras, and Sri Lanka, and his work has been recognized by the Society of Professional Journalists, the Society of Environmental Journalists, and the Sidney Hillman Foundation. Dr. Jean Ensminger is the Edie and Lou Wasserman Professor of Social Science at the California Institute of Technology and is a past president of the Society for Economic Anthropology. Dr. Ensminger has conducted several decades of research on Africa, and her current research focuses on corruption in development and decentralized government. Mr. Scott Morris is a senior fellow at the Center for Global Development and a director of the U.S. Development Policy Initiative. Mr. Morris also served as Deputy Assistant Secretary for Development Finance and the Debt at the U.S. Treasury Department during the first term of the Obama administration. Ms. Elena Berger is the Child Rights Program Manager at the Bank Information Center. She is a human rights lawyer with significant experience working on education and children's rights at the international level. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. But I'd like to, before we turn to our witnesses, I'd like to give our ranking member an opportunity for a 2-minute opening statement. And the chair now recognizes the ranking member of the full committee, the gentlelady from California, for 2 minutes.
Thank you. Thank you very much. I would like to welcome our witnesses here today to discuss one of the very important issues within our jurisdiction, which oversight of U.S. participation in the multilateral development banks, including the World Bank. There is by now widespread agreement that poverty in the developing world is one of the major challenges facing the world today. While the success of some countries over the past 50 years have shown that development is possible, failures elsewhere have shown that it is not inevitable. I believe that the criticism of the World Bank that you'll hear today should be understood within a context that also recognizes the great deal of progress the bank has made in many areas over the past few decades. In large part due to pressure from civil society, from individual governments, from parliaments, including the U.S. Congress, and in particular from this committee itself. Over the years, this committee has successfully insisted upon much more transparency and disclosure of information from the World Bank. Many years ago, we conditioned U.S. support for the bank on the creation of the inspection panel. an independent accountability mechanism that would investigate allegations by citizens of the bank's failure to follow its own policies and procedures. Working in a bipartisan fashion, we successfully pushed for debt relief, and then for better and more effective debt relief for impoverished countries. We've also pushed for less burdensome conditionality and more attention to the social dimension that must be present when decisions about development assistance are made. I welcome both the criticism and the recommendations that our witnesses will make today, which in my view means that you'll also be making the case for strong U.S. leadership within the bank and for more vigorous congressional oversight, and for this committee in particular to take a more active role in helping to shape the development policies that have helped make the World Bank the preeminent development institution that it has become. I'd like to thank the chair and Ms. Moore for all the work that she's done to help us make sure that we give the kind of support to the World Bank that is needed. Thank you.
Thank you. The gentlelady's time has expired, and each of the witnesses will now be recognized for 5 minutes to give oral presentation of their testimony. Without objection, each of your written statements will be made part of the record. Mr. Chavkin, you are now recognized for 5 minutes. If you could turn on your microphone there.
Chairman Barr, Ranking Member Moore, and members of the committee, thank you for inviting me to testify about the World Bank. I'm a reporter for the International Consortium of Investigative Journalists, or ICIJ, a nonprofit news organization that conducts investigative reporting on global issues of public interest. We work through large collaborations with media outlets around the world, such as our project last year, the Panama Papers. I was the lead reporter in a global ICIJ investigation entitled Evicted and Abandoned, published in April 2015, which examined forced displacement caused by projects financed by the World Bank. Our team included more than 50 reporters from outlets in 21 countries. We reported on the ground in 14 countries in Africa, Asia, and Latin America, and we analyzed more than 6,600 World Bank documents to track what the bank calls involuntary resettlement associated with projects. We found that over a decade, spanning from 2004 through 2013, projects financed by the World Bank physically or economically displaced an estimated 3.4 million people around the world. That means that these people either lost their homes, their livelihoods were damaged, or they lost some or all of their land. The figure was drawn from the bank's own documents tracking resettlement and includes projects funded by the IDA and IBRD, but not the bank's business lending arm, the IFC. We also found that the bank regularly failed to follow its own safeguards for protecting displaced communities. These commitments include resettling communities in equal or better conditions than they lived in before, restoring lost livelihoods, and avoiding violent evictions. We found instead that the bank repeatedly funded governments that not only failed to adequately resettle communities, but in some cases were accused of human rights abuses, such as rape, murder, and violent evictions associated with bank projects. We found in several cases that the World Bank continued to bankroll these borrowers even after evidence of these abuses came to light. One of the most significant cases we examined was the bank's support for a health and education initiative in Ethiopia called the Protection of Basic Services Project. We investigated allegations that some of this money was diverted to an Ethiopian government program called villagization, which violently evicted a minority tribe called Anuak from their traditional farmlands, which were then turned over to investors. I met with Anuak refugees from Ethiopia in a camp in South Sudan. I encountered a devoutly Christian community whose members described being beaten, raped, and seeing family members killed by Ethiopian soldiers who were driving them from their land. I also spoke to the former Ethiopian governor who was in charge at the time of the evictions, now living in exile in the Philippines, who described to me how he personally diverted $10 million in World Bank funds to the villagization program. Despite the evidence presented by refugees, human rights groups, and others, the World Bank refused to acknowledge that its funding had supported these evictions. Last year, the bank announced an extension of a similar initiative in Ethiopia under a different lending mechanism that now makes it impossible for communities to file complaints to the World Bank Ombudsman. There are three findings from our reporting that seem most relevant to the work of the committee today. One is that the World Bank has serious problems with enforcing its safeguards and holding its borrowers accountable for following its rules. The second point is that the bank can be responsive to pressure in the form of negative publicity and the influence of donor countries, particularly the United States. Shortly after ICIJ shared its findings with the bank announced a resettlement action plan that boosted funding for safeguards enforcement by 15% and hired 11 new safeguard specialists. The resettlement documents and ombudsman reports that allowed ICIJ to conduct our investigation existed because the bank had previously adopted an open records policy and created an ombudsman, the inspection panel, at the insistence of the United States and members of this committee. Finally, the failures in safeguard enforcement do not negate the fact that the same projects may also have positive effects on development. In Ethiopia, for example, the bank said that its investments helped slash child mortality in half in less than a decade. Thank you.
Thank you. The gentleman's time has expired, and now Dr. Jean Ensminger, you are now recognized for 5 minutes.
Chairman Barr, Ranking Member Moore, and distinguished members of the subcommittee, it's an honor to have been invited here to testify. In 2007, based upon my research experience in Kenya, I asked the World Bank to investigate corruption in the Kenyan Arid Lands Project. INT is the World Bank's Integrity Vice Presidency, and it has sole responsibility for investigating corruption in World Bank projects. In its investigation of 28,000 financial transactions from the Arid Lands Project, INT concluded that 62% were suspected, fraudulent, and questionable. The Arid Lands Project was then shut down. The Arid Lands case tells us something about the effectiveness of routine monitoring systems at the World Bank. For 14 years, this project was rated, quote, satisfactory, despite the monitoring of the World Bank's task team leader, external supervision missions, regular financial management reviews, and audits. In 2007, it was even referred to as, quote, exemplary, and served as a model for a new project. Two of Arid Land's biggest problems were lack of transparency and excessive staff discretion over the selection of project recipients. Control of future funding provided leverage to silence beneficiaries who complained about project corruption. Most troubling to me is that I see the same patterns on the ground today in World Bank projects. Recently, a villager asked the regional head of a current World Bank project in his area how much money his region was budgeted to receive from the project. The head of the project refused to tell him. 2 weeks ago, I made the same request of that project's 2 World Bank task team leaders. I have received no response. Fortunately, not all World Bank projects are as poorly designed and implemented as Arid Lands. The original Indonesian community-driven development project is deservedly often cited as the great success story. The Indonesian project was specifically designed to bypass the major centers of government corruption. Private firms were used to hire many project staff rather than seconding them from corrupt government ministries. The tone at the top of the project was inspiring, and this attracted reform-minded job applicants. The Indonesian project used a democratic and competitive selection process controlled by beneficiaries to allocate funds. In striking contrast to the secretive nature of Kenyan projects, the Indonesian project also aggressively encouraged uncensored media coverage and academic research by third parties to shine a spotlight on problems like corruption. What the Indonesian case teaches us is that development aid can work to better the lives of the poor. But when projects don't work well, as was the case with Arid Lands, sanctions are necessary. This is where INT comes in. My concern is that INT has moved away from intensive forensic audits in favor of a concentration on debarment cases. Since the Arid Lands forensic audit 5.5 years ago, INT has posted 48 investigation reports on its website. 45 of the 48 are investigations of companies. The vast majority of these cases involve one company that was found guilty of fabricating documents in order to qualify to bid on contract. Company debarment is important work. The problem is that corruption in many World Bank projects is not limited to a few rogue contractors. In systemically corrupt countries like Kenya, it is common for World Bank projects to be captured by the government ministry cartels from which the project staff is seconded. Failure to undertake these investigations leaves a vast segment of the World Bank's portfolio exposed. There is an inherent conflict of interest between the mandate of INT to fight corruption and operations goals to keep the money flowing and client states happy. INT is in the political crosshairs. In my written testimony, I list some specific recommendations for reforming INT and transparency policies. The first is to move INT's direct report out of operations and over to the audit committee of the board of directors. Regarding transparency, while the new disclosure policies of 2010 are laudable, They specifically exclude access to project financial data. These are precisely the data that beneficiaries and third parties need to fight corruption. Thank you for your time, and I welcome your questions.
Thank you. And now, Mr. Morris, you are recognized for 5 minutes.
Mr. Chairman, Ranking Member Moore, thank you for the opportunity to testify this morning on the World Bank's work in low-income countries. The World Bank is the leading provider of development assistance in the world, working in nearly 150 countries globally. But by leader, I don't just mean that the bank is the largest. The World Bank consistently appears as the most, or one of the most, effective development institutions globally on key measures of cost efficiency, project outcomes, and policy influence. These were the findings of aid reviews conducted by governments like the UK, Australia, and the Netherlands, by independent organizations like mine, and by an extensive survey of developing country leaders conducted by ADATA, a US-based research organization. This broader context is important for considering questions of World Bank reform and instances of project-level failures. I'd like to briefly address how to think about cases of failure in the bank, 3 areas of reform I think deserve consideration, and finally, the degree to which the United States can continue to exercise effective oversight in this multilateral institution. And I elaborate further in each of these areas in my written testimony. Risk of failure is inherent in the work that the World Bank does, particularly operating in difficult environments, whether in very poor countries like Uganda or countries beset by conflict like Afghanistan. Zero risk would essentially mean zero activity for the institution. The key questions are, how does the bank manage risk and promote effectiveness, and how well does it learn from its failures when they do occur, as they clearly did in the 3 cases highlighted by the other witnesses this morning. The bank has multiple layers of monitoring and checks aimed at promoting effectiveness and guarding against corruption. The bank's investigative arm, INT, typically finds that substantiated cases of fraud and wrongdoing are associated with about 3% of the bank's active projects. In these cases, the INT office uses measures such as Department of Firms and works with local authorities to pursue prosecutions. Separate from INT, the bank also has an independent complaints mechanism, the inspection panel, as we heard, with origin in this committee. There is broader evidence that the World Bank does learn from its failures, but let me point to 2 examples that follow directly from the Uganda case. The bank's board of directors just recently approved a $230 million road project in Bolivia, in which risks similar to the Uganda project, associated with a large influx of labor, were actively identified and mitigated as part of the project design. And more systematically, the bank has also launched a gender-based violence task force, which should in part help to address a longstanding problem within the institution, in the sense that the lessons learned in one region or sector are overly siloed and are not readily taken up in other regions. But how can the bank do better? I offer 3 ideas aimed at promoting effectiveness and guarding against corruption. First, greater reliance on results-based mechanisms like the Program for Results. Under the program, the bank and the country agree at the outset on appropriate standards of oversight and a set of desired outcomes, such as an increase in literacy rates in an education program. And the bank only disperses money if the outcomes are achieved, rather than simply dispersing money to pay for project inputs. Second, we would have a stronger overall evidence base for the bank's performance if INT had the capacity to conduct randomized audits of bank projects each year. So not just responding to signs of corruption, but proactively reviewing a random selection of projects. Third, the bank could move more aggressively toward adopting new technologies to improve project accountability and performance. For example, recognizing the remarkable degree of smartphone coverage even in the poorest countries, the bank could be deploying apps that enable whistleblower-type reporting, as well as more transparent community-level ratings of bank projects. The last point I'd like to make relates to the role that you play. As the largest cumulative donor to the World Bank's IDA since its founding, the United States, and particularly the U.S. Congress, has effectively leveraged these resources to set policy in the institution. U.S. commitments also enable the World Bank to engage effectively in situations that are critical to our interests, such as supporting Jordan's hosting of a massive influx of refugees from Syria, efforts to contain Ebola in West Africa, and just this week, a $1.6 billion commitment to address unprecedented famine in countries like South Sudan and Yemen. With recent financial reforms to IDA, every dollar the United States contributes now leverages nearly $25 in assistance to low-income countries each year. But steering the bank's work requires active engagement, which in turn continues to rely on a strong U.S. pledge to IDA and a commitment to honoring that pledge. Finally, my time's up, but I do want to encourage you as a committee to consider participating in some kind of process that's looking broadly at our aid toolkit through a formal review process, whether a multilateral aid review or one that encompasses the bilateral programs too. Thank you.
Thank you, Mr. Morris. And now, Ms. Berger, you are now recognized for 5 minutes.
Mr. Chairman, Ranking Member Moore, thank you for inviting me to testify this morning. I manage the Social Inclusion and Accountability Program at the Bank Information Center, or BIC. BIC is an independent, non-governmental organization that works to ensure that projects implemented by multilateral development banks work for the communities they are meant to serve. BIC became involved in advocacy around the Kamwenge-Kabarole roadway, part of the World Bank-funded Uganda Transport Sector Development Project in the summer of 2014. Joy for Children, a Ugandan civil society organization, alerted us to the fact that the project was leading to sexual exploitation of young girls along the roadway construction. The project had created a boomtown effect, where there was a large influx of construction workers into what had been a somewhat isolated rural community. These workers were sexually harassing, exploiting, and raping teenage girls. Higher rates of teenage pregnancy, HIV/AIDS, and girls dropping out of school soon followed. The resident had wanted this roadway to be built and recognized the significant economic benefits that would result from its construction. Even when the project started resulting in harm, the residents supported its continuation. They simply wanted harm to their families and communities to be addressed. Months of attempts to convince the contractor carrying out the project to take measures to prevent the harm was fruitless, as the contractor made clear that they did not see the community's problems as their responsibility. Efforts to seek assistance from the Ugandan government were similarly unsuccessful. When the community first brought their concerns around this project to the World Bank, the immediate response was denial. It was only when the community filed a request with the inspection panel, the bank's independent accountability mechanism, that the bank took the community's concerns seriously, ultimately taking the extraordinary step of canceling the project. However, the significant delay between the community raising concerns and the bank addressing this harm meant that there was a 9-month period during which several additional girls reportedly became pregnant, dropped out of school, or contracted HIV. In our experience, it is profound failures at the bank that lead to the most significant reforms, and we are seeing that now. After the inspection panel released its report from the investigation, bank management took the unusual step of putting together a document analyzing lessons learned to look at the broader institutional failures behind the harm suffered by this community. In this document, the bank noted several critical gaps that allowed these failures to occur, including the lack of expertise within project teams to properly assess, prevent, and monitor gender-based violence, GBV, and failure to adequately listen to communities and civil society. To remedy these issues, the bank established a GBV task force. The World Bank has also used its considerable influence to seek reform within the Ugandan government. The bank has provided ongoing capacity-building support to the Ugandan National Road Authority, aimed at strengthening its ability to monitor and supervise contractors' compliance with environmental and social standards, and to reduce corruption within that agency. Going forward, to ensure that the bank comes out of this experience stronger and more able to prevent and respond to serious negative impacts from bank projects, it is absolutely essential that the bank fully implement all of the reforms discussed in the Lessons Learned document, along with all of the recommendations made by the GBV task force. The bank must also improve its social assessments to identify risk to children and other vulnerable groups who are least likely to have a voice in the process. Additionally, the bank must prioritize genuine citizen engagement. It must seek out ways to listen more effectively to communities and local civil society organizations. The bank must be prepared to swiftly address reports of sexual abuse involving trained experts in any investigation. In closing, we would like to note that throughout the bank's history, the U.S. government has been a critical leader in reforming the institution, which has led to lasting changes across the development finance landscape. In this case specifically, the U.S. government played a leadership role at the World Bank Board to encourage broad institutional reforms aimed at preventing similar failures in the future. Today, continued U.S. leadership is needed to ensure that proposed reforms are implemented. We appreciate the committee's interest in this case and look forward to working together to advance reform at the World Bank.
Thank you to all the witnesses for your testimony and your recommendations on how to reform and improve the operations at the World Bank. The chair now recognizes himself for 5 minutes. In the past, we've seen U.S. national security officials make a case for the multilateral development banks, arguing that economic support for our allies serves key interests. Given the downsides to some of the bank's assistance that we've heard about from our witnesses here today, I wanted to ask our panel, particularly Mr. Morris, what effect does support for oppressive regimes have on our national security interests? Are we resigned to working with governments that may help us in the short term, but whose long-term impact on their citizens creates potential security risks further down the road? What are the trade-offs here?
Well, thank you, Mr. Chairman. I think it's really an important question and points to the underlying challenges that an institution like the bank actually faces, and particularly working on behalf of the interests of the United States as its largest shareholder. The bank is engaged in some very difficult environments with client country governments that in some instances would not meet our standards of sort of democracy and freedom. But it is also in those very instances where the U.S. is pushing the bank to be engaged, because it is often situations where we have troops on the ground. And we need the bank there doing things like road projects that are directly supporting our efforts. But you're right, there is a broader challenge of the sustainability of that kind of engagement if we don't have a credible client country government partner. And this is just an ongoing challenge. I think in some instances the U.S. Has been very good at pushing the bank to pull back in the face of clear problems of governance. But frankly, in other situations where we have direct strategic interests, we may be pushing in the other direction.
Thank you. And for the other three witnesses, I wonder if we could make or should make the link between the bank's activities and national security more explicit. For instance, if the World Bank takes on the issue of refugees, what should the bank be doing to prevent extremism or radicalization within those communities? Alternatively, should the bank refocus some of its lending to regions and countries where extremism, radical Islam is a particular problem? Any of the other witnesses care to chime in on that?
Thank you, Mr. Chairman. I think that what the bank needs is more of an ability and willingness to walk away from the table when serious abuses are occurring. I am not a national security expert, but what I can say is that there have been a number of cases in recent years where there have been repeated credible claims and evidence that has emerged of governments and companies that have received support from the World Bank Group engaged in human rights abuses or corruption, and that cases like the project in Uganda where the bank pulled back are vanishingly rare. And obviously, lending is an important source of leverage for the United States as well. But it seems that often, as you mentioned before, the desire to lend tends to outweigh ability to draw a firm line when it comes to governments and companies using bank projects to commit abuses.
And Dr. Ensminger and Ms. Berger, when you answer this question, when the World Bank works with a government or an education system within the government, if the goal of the World Bank is alleviation of poverty and economic growth, what responsibility does the bank have to work with education systems to undermine ideologies that are incompatible with freedom and growth?
I don't have a ready answer to that question, but I can address your previous question.
Okay.
Would that be all right?
Sure.
I think you hit the nail on the head regarding long-term interests versus short-term interests regarding national security issues. And it speaks directly to when and whether we cut off a country. It also speaks directly to corruption. So in the case of Kenya, for example, we cooperate a great deal with Kenya on national security issues regarding fighting al-Shabaab across the border in Somalia. So it is in our short-term interest to cooperate with Kenya. How much license will we give them in terms of corruption and other abuses before we are in a position to cut that country off? We've undermined our own bargaining power on those issues.
And my time has expired. Thank you for your answers. The chair now recognizes the ranking member, Congresswoman Moore, for 5 minutes.
Thank you so much, Mr. Chairman. And I have really learned a lot and really appreciated all of your testimony here. One of the things that I really find it very, very re-stimulating and frightening to think about these young women and young girls who have been raped and taken advantage of in these countries. When I talked with the World Bank, it's so pathetic to think about some of these Ugandan girls who one of these workers would give them 15,000 shillings, about worth $3. And, a 14-year-old saw that as evidence that they loved them and cared for them. I guess one of the things I want to get clear before I ask more questions is I heard correctly, didn't I, that there's nobody on this panel that thinks that that the World Bank is not important to engage, that they continue to support the United States paying their dues and being engaged and involved in the World Bank. Am I clear on that, that there's no one that thinks we need to just bow out?
As a reporter, I'm not here to make policy recommendations.
Okay, got you.
But certainly none of our findings suggested that United States contributions and engagement were a part of the problem.
Okay, thank you.
And in our case, we found that U.S. engagement actually was incredibly important to gaining redress for these girls.
Right.
In fact, the U.S. executive director would go into meetings with bank staffers, bringing representatives of other U.S. agencies like USAID and the State Department. And because the U.S. was the only board chair to do that, the U.S. was able to ask the bank very specific, nitty-gritty questions about how the bank was redressing the harm to these girls, and the U.S. was able to put pressure on the bank to remediate this harm in ways that other governments did not do. So I think the U.S. contribution and U.S. leadership was critical there.
Thank you. Okay. I guess the other question I have is, you know, since you talked about counterterrorism, I guess I want to talk a little bit. Not only, it's my understanding from all of you all's testimony, that not only was it the corruption of these country governments sometimes, or the fact that the governments would not necessarily address the problems, but it was also a problem of the contractors. In the case of Uganda, these were a Chinese contractor did not do their due diligence. So I ask this question, or maybe just make a statement. You know, we have just this session, through the Congressional Review Act, eliminated Section 1504 of Dodd-Frank, which requires that there be oversight over extractive industries, where American companies are going in, taking the oil and minerals and stuff out of the country, that they disclose these contracts and relationships. And so the potential for corruption it will be spawned by this. So Mr. Morris, do you have an opinion on this?
Sure, Ms. Moore, thank you for that. And I would say, you know, one of the mandates of the bank is as an institution to be pressing for transparency in the work that it does, and as you know, providing sunlight in these situations that does guard against corruption. If I can make two quick points related to the issues you raised. You know, on the Uganda case, it's also, I think it's worth stepping back and recognizing if you don't have the World Bank or institutions like it, making the direct connections between, you know, road projects being associated with the terrible failings we saw in this case, it's not clear to me that other sources of finance for these projects will do that. I think it is a mandate for the bank to make those connections in ways that
Reclaiming my time, you know, others will, like the Chinese Development Bank, some of the other banks around the world, where there won't necessarily be that accountability and transparency. They'll just pick up the slack if we were to disengage. I'm sorry, Mr. Morris, you can continue.
Yeah, no, that's absolutely correct, and I think that's also the broader perspective on the financing landscape. Is it's no secret in sub-Saharan Africa in particular, Chinese financing has become dominant in.
Reclaiming my time, Mr. Chairman, I'd like to put three things in the record without objection. Accept statement for the record, the letter that I referred to with former Chairman Husenga, and a third statement from, where did I do it?
Without objection, so ordered.
Without objection, those three things will be placed in the record as soon as I find the third.
Thank you. Without objection, those will be placed in the record. And the chair now recognizes the vice chairman of the subcommittee, the gentleman from Texas, Mr. Williams.
Thank you, Mr. Chairman. At a hearing last Congress, one of our witnesses, Dr. Martin Ravelon from the Center for Global Development and a former longtime staff member at the World Bank, told us this. The reality is bank staffs are assessed by the volume of their lending, dollars of money lent, and that is just a poor indicator of impact on poverty. You have impact on poverty sometimes when you don't lend at all. Dr. Ravelon echoed an argument that has been made at the bank for decades. Moreover, a recent report by the World Bank's independent evaluation group confirmed that even after all these years, the pressure to lend that is felt by staff inhibits learning and takes the focus off development outcomes. So, Mr. Shavkin, I would ask you this question. What has been your experience with World Bank staff's commitment to project results, and is that a high priority for them, do you think?
I am not in a position to speak to whether projects
Okay.
delivered on development goals. If it's helpful, what I can say is that I believe that pressure to lend has been an important factor in failure to follow safeguards. For example, for quite a while, there was actually a system in which safeguards officers would be reporting to project managers whose responsibility was to get loans approved. The bank has now improved that system to some degree in providing greater budgetary and organizational independence to its safeguards officers.
Okay, thank you. Ms. Emsinger, is effective management important to staff, do you think? And do they already have the tools to preempt some of the failures we've heard about today, or are they in over their heads, simply?
There is tremendous pressure to push money out the door. It's been talked about for decades. It's not been adequately resolved. There are many wonderful TTLs, team test leaders, in the bank who would like to do their job better. Because of the pressure to move money out the door so quickly, they are stinting on design elements, not out of desire, but because of the pressures on their time, cutbacks on their budgets. They're not capable of doing adequate supervision. For the same reasons, we see a conflict of interest regarding aggressive measures on corruption, as well as operations interference on INT investigations.
Okay, thank you. Ms. Berger, what more could the bank do to incentivize its staff, in your opinion, to care about these elements of a project? How can the U.S. change the bank's culture?
So one of the things that the U.S. has already done is in the lessons learned document that the bank put together after this project, it talked about this staffing issue. And it said that there was a need for social and environmental safeguard specialists to be involved in the project throughout the project cycle. And this is something the U.S. really pushed for in that document. Because if you have those social specialists involved, not only during the project design, but also during the project's implementation and the monitoring and supervision phase, you have someone with the training to pick up on potential problems like the ones experienced by the girls in this case. And as soon as they see risk factors for sexual exploitation, they can put in place measures to prevent that.
Thank you. Mr. Morris, why has the critique of bank incentives endured for so many years, in your opinion? Why can't the bank get it right when even the staff knows incentives are misaligned?
I think the pressure to lend is a real issue, and the critique over the years is genuine. On the other hand, it is a bank, and its core model is to lend. So that's going to be with us absent some fundamental restructuring of the institution. The chairman mentioned the views of Angus Deaton in his opening remarks, and I think Professor Deaton offers a thoughtful critique that one of the challenges of being overly reliant on lending is it does crowd out other types of activities, doing long-term research and development work. So I think there are ways in which structurally the bank could be shifted toward a wider range of activities, which would also have the effect of dampening some of the negative incentives around lending.
Okay, real quick also to you, what would the bank have to do to shift staff incentives toward project results and knowledge generation?
I think the bank has frankly made a lot of progress in this way. I think we do see much more emphasis on actual project outcomes, not just success being defined by closing the deal. Certainly, there's always more progress that could be made in that area. But I do think we see a more outcomes-oriented institution today than what we saw, say, 20 years ago.
Okay, thank you for your answers, Mr. Chairman. Yield back.
The gentleman yields back, and now the chair recognizes the gentleman from Washington, Mr. Heck.
Thank you, Mr. Chairman. For anyone on the panel that knows the answer to this question, it is as follows. Is there a more current rating of the quality of official development assistance assessment of the IDA since the one for 2014, in which the IDA was found to rank in the top 10 of all four of the metrics of effectiveness and quality?
Congressman, I'll answer that because it's actually that work was done by my colleague at the Center for Global Development, Nancy Birdsall, along with colleagues at the Brookings Institution. That is the most current rating that was done through the so-called quote exercise, And as I said in my statement, it's consistent with other kinds of reviews which attempt to compare institutions like the World Bank to other development institutions. And it is, I frankly, remarkable how consistently the World Bank appears at the top or among the top in those kinds of ratings.
Perhaps for you as well, Mr. Morris, one of the concerns about the IDA that has been expressed is whether or not its role is duplicative in the broader scheme. And I'm wondering if you would characterize any way in which the IDA is unique in terms of how it contributes to the World Bank mission and that of its corollary partners.
Well, certainly from a U.S. perspective, I think...
Aside from, pardon the interruption, sir, but aside from obvious quality, given the ranking of the assessment, is there any way in which it's unique?
Sure, and beyond quality, I think for the United States, it is hugely complementary, actually, to our own toolkit. If you look at our bilateral programs, which are almost exclusively grant allocations in areas like humanitarian assistance and global health, what IDA does is, again, lending-based, much more focused on big infrastructure projects. So in that way, it is, as an extension of our own assistance toolkit, a great complement. And in the face of actors like China, which through their bilateral programs are doing massive amounts of infrastructure investment, I think it's important from a U.S. perspective to see the value in IDA's work in this broader approach to economic development.
Mr. Morris, is it generally the case, as I've been led to believe, that when China engages in bilateral development aid, air quotes, there are often conditions with respect to continuing economic relationships and concessions given to China with respect, for example, access to mineral resources and the like?
Congressman, one of the challenges of evaluating China's investments is that there's not a lot of transparency in the relationships.
What's your impression?
My impression is that the Chinese themselves would not characterize most of these flows as aid. They are doing it for their own direct economic interests, commercial interests, and so I think that certainly affects the kinds of agreements that they strike, both in terms of the sectors they're investing in, the kinds of concessions that they would get. I think that's a reality of it. I think it still comes with some benefit for these countries, but it certainly raises concerns of the type I think you're alluding to.
And so, in effect, in the effort to cultivate good relationships, which indirectly, if not directly, contribute to our security, we come to the world stage offering these loans in a transparent way and without conditions, but are in very real competition with China, who seeks to extend its influence as well. Is that an accurate reflection?
Congressman, I think that's correct. I would say on the question of conditions, I think to the degree the World Bank does attach conditions in its engagements, they are broadly aimed at an effective relationship. They are certainly not about creating advantages for any one country.
So quickly, in my limited time left, I could not find it in the material. Are you familiar with the default rate of the IDA, what the default rate of the IDA is, and how that compares to its peers?
As a general matter, countries do not default on the World Bank, and there's the issue that the bank has so-called preferred creditor status. It is not in the interest of any country to default. There have been countries that have been suspended from bank assistance because they are in arrears, but over the long term, countries pay back their money, which is evidenced by the AAA rating that the bank has.
I yield back the time I no longer have available with gratitude for your answer and the chair's indulgence.
Thank you. The gentleman's time has expired, and now the chair recognizes the gentleman from Indiana, Mr. Hollingsworth.
Good morning. I'm glad that all of you came out today and really appreciate your testimony this morning. My question is really about mission creep and better understanding what we believe the mission of the World Bank to be specifically and to what extent we think they're serving that specific mission. It's my understanding that the genesis of the World Bank was really to help countries who couldn't access international credit markets develop in a manner that would enable them to do so. Certainly that's changed over time, but something that my constituents continue to worry about, not only with this institution, but with institutions more broadly, is that we're continuing to develop an approach where we try to be all things to all people in all places, and we end up not doing any of them exceptionally well. To what extent do each of you think that perhaps an overly broad mission, a focus on middle-income countries as well as extreme poverty, in low-income countries, focus on health as well as development infrastructure, have led to some of these failures? And more specific mission and a clear-cut mission would enable them to do better at what we want them to do. Left to right.
Thank you. I'm not really in a position to comment, particularly if we're looking at IDA replenishment. The performance of IDA seems separate in some ways from the performance of IBRD, which is the middle income lending arm of the bank. I'm going to leave it at that.
Excuse me, I'll speak again just directly to my experience with IDA, and particularly in Kenya, which I suspect is very typical of other African countries. The problem, as I see it, is not with mission creep, but the way in which the mission is accomplished. So I'm not seeing a problem specifically in the IDA funds that have targeted Kenya, but this may also be a function of my limited experience with some of the other areas, infrastructure projects, for example. But from my own perspective, I would not put that down as the #1 problem.
Congressman, I think you're absolutely right, certainly defining the origins of the bank, the evolution, and then pointing to this as a potential challenge of the bank trying to do too many things in too many places. But I would point out, in the full range of countries, look at a country like India, where, #1, the remarkable progress globally in poverty reduction, and then where we want to be going forward. You really have to bet on India's success to achieve what we want to achieve when it comes to eliminating extreme poverty. The bank is a hugely important partner to India, and what the bank is doing, which I think is entirely appropriate, is not to say you no longer are eligible for IDA, therefore we're done with you, but to shifting the nature of assistance so that it is better leveraged, it's more cost efficient for countries like the US that are putting money in. So then the relationship evolves, but the engagement is still critical, and I think from our perspective of what we have in terms of goals around the world.
When we talk about Uganda, I think the thing to keep in mind is sort of the but for. What if the World Bank hadn't been involved, right? Is the World Bank's involvement in Uganda looking towards reducing poverty constructive? And I think in this case it really was, because the community really saw this roadway as their way to reduce poverty by allowing them to access markets, sell their goods. And so that roadway was critical, and the World Bank's involvement in that roadway was particularly important because it was through the World Bank that the community was able to get redress for their harms and was able to get changes made to the project so that it was more responsive to the needs of the community. And I think absent that, if the road was being built without the World Bank, you simply would have had the road, but nobody would ever have addressed these sort of negative repercussions, which means you wouldn't have achieved the aim of reducing poverty. Because while you'd have that access to markets, you'd also have all of these families with, teenage mothers who weren't able to finish school and all of these negative impacts that kept people in poverty.
Right. Thank you. I yield back the rest of my time.
Thank you, Ned. At this time, I think Mr. Chapkin offered to introduce into the record 3 articles, and without objection, those articles will be submitted for the record. Now, the Chair recognizes the distinguished ranking member of the full committee, Mrs. Waters from California.
Thank you very much, Mr. Chairman. And again, I'd like to thank our witnesses for being here today. And as you know, when we hear some of the kind of problems that you have, the kinds of problems that you have identified here today, it's disturbing, and we don't feel good about it, but we really do feel good about the fact that we are major players in these bilateral institutions, and that this country is doing its part in the world to deal with poverty, and that we must do everything that we can to support these projects. We must do everything that we can to make sure they're operating in the way that they are supposed to be operating. And I see that the World Bank, in many instances, has taken steps to deal with some of these problems. I want to know about the bank's report titled Lessons Learned and Agenda for Action, which examined the issues and massive failures that arose from the Uganda project. So did they issue a report of some kind entitled Lessons Learned and Agenda for Action?
Yes, absolutely. And this was the unique thing that the bank did in the Uganda case, recognizing those failures. The bank always issues an action plan after an inspection panel case. That action plan, though, only addresses the harm to a particular community. What's unique about this lessons learned document is it looks at failures across the institution and the ways to remedy those failures. And as I mentioned a moment ago, the U.S. government, the U.S. Executive Director's Office at the bank played a really important role in strengthening that document so that the recommendations for reform really hit at the issues that cause problems in this project.
Well, I'm very, very pleased to hear that. And I must share with my colleagues that I visited Uganda, and it was for something different. We were looking at HIV and AIDS, and I was so impressed with the will and the desire of people in that country, despite the lack of resources and the poverty, to get something done and to deal with that issue. A lot of determination by folks who have very little. And so I certainly want us to continue to give support to these poor countries to help eliminate poverty. And I'd like to also ask, what do you think, I don't know how many participating countries visit these projects, and what good does that do? And should we take a look at visiting more, showing up so people know that we're interested, that we care about what's going on? What do you think about that?
I'd like to say that showing up and seeing what's happening on the ground is one of the most valuable contributions that I believe that the committee and others overseeing the bank could make. In reference to the Uganda report as well as the resettlement plan, I think what they show is that the bank has the capacity when it wishes to address some of these systemic problems that arise. In the case of the bank's failures in enforcing its resettlement policies, what we found, however, was that the bank had actually been looking into this for years, and it had issued internal reports. But those reports had essentially sat buried until we began investigating and asking questions about them. And so what I think the issue for the bank is, why does it take a Uganda project or an Ethiopia project or a report in the press for these reforms to be enacted? And I think that one way to encourage the bank to be more proactive and more forthright about addressing the problems with its oversight would be going to the ground and seeing what's happening for yourselves.
Thank you very much. And I'd like to say to Mr. Barr and to Ms. Moore, I think that's a challenge for us to get on the ground and take a look. You think that's good, Ms. Berger?
Definitely. I think going and seeing the context where a project is happening really helps you to understand the problems faced by the community and the ways to address them.
Thank you all so very much. I yield back the balance of my time.
Thank you. The gentlelady yields back. The chair now recognizes the gentleman from Arkansas, Mr. Hill.
Thank the chairman. Thank the ranking member for hosting this hearing today. Appreciate the witnesses being here to talk about an important subject, not only to global development, but also to American taxpayers. I've got some experience in my past government service of working with USAID on the design of technical assistance in foreign countries, so I have some personal understanding of the challenges that comes in working abroad and designing things that work on the ground. And I also just returned from a trip to the Republic of Congo, where the systematic spreading of concrete by the Chinese government across the whole country of Congo was quite evident. But the issue of corruption was discussed there, as well. So I really appreciate the witnesses today talking about the World Bank and its work around the world. First question I have is, when we look at the fact that the U.S. has a little larger percentage contribution and ownership in the European Bank and in the Inter-American Bank, are we more effective at guiding policy there versus the World Bank? I'd be interested in views on that.
So, Congressman, I'll take a stab at that, and should note in answering that I served in the prior administration representing the United States across these institutions. I guess my judgment would be that shareholding is an important measure of our influence, but it's not the whole picture. And I think we have different degrees of influence within the different institutions. And frankly, I think the World Bank, for reasons of long history, for reasons of the fact that they reside here in Washington, As many people noted, the bank has always had an American president. I think it's pretty well understood that the U.S. has a high degree of influence within that institution, even though its membership is much broader and our actual shareholding, as you said, is significantly smaller than at the Inter-American Development Bank.
Well, in that regard, I'd like your views, Mr. Morris and Dr. Ensminger, on, in your testimony, Dr. Ensminger, you say, neither Congress nor the USED's office have the power to micromanage the World Bank policies. Changes of this sort, I'm suggesting, would require significant commitment and a great deal of sustained U.S. leadership to win support of a majority of sympathetic board members. So how are we as members of Congress who allocate the resources to contribute to these multilateral institutions supposed to enhance the sustained U.S. leadership to get those sorts of changes? Dr. Ensminger, you've made this as your testimony, so I'll let you start on that.
Well, as I understand it, you do have leverage over the Treasury, and the Treasury has leverage over the USED's office. You also have an American president, American-appointed president, who has recently demoted the reporting status of the vice president for INT. I don't understand the reasoning behind that. I think it sends a very bad message, and as I've suggested in my testimony, I think there is undue influence on the part of operations over INT's investigations. I experienced this firsthand in the Arid Lands investigation. And I might also add, although it's not directly relevant on this point, I have not been impressed with the follow-through and the lessons learned from the Arid Lands case, in contrast to what's obviously a very different picture here in other arenas. Corruption continues to be a huge problem, and I think the role of INT is also continuing to be perhaps moving in the wrong direction. So I would hope that you can exercise extreme leverage on that issue, because I think it's extremely important.
Mr. Morris?
And Congressman, I would just encourage you both to be directly engaged with senior management of the bank and through senior U.S. Treasury officials. I think both are really important channels of influence that you have. And I want to correct slightly because I think it's often mischaracterized. The United States is not in a position to appoint the president of the bank. The U.S. nominates a candidate to be president of the World Bank. Through an election process, the outcome has consistently been the American candidate.
Well, I think we need to use that leverage to the best of our ability, and it's really hard for members of Congress on both sides of the aisle to justify continued U.S. financial commitment to institutions that have such a poor track record in many ways, even though they do good around the world. There's no doubt. I'm not excusing good that they do, because facing $20 trillion debt, we have a lot of pressure on us to make sure that taxpayer resources are spent wisely and that we get bang for our buck. I yield back. Thank you, Mr. Chairman.
Thank you. The gentleman yields back, and the chair now recognizes the gentleman from North Carolina, Mr. Pittenger.
Thank you, Mr. Chairman. Thank each of you for your dedication and work in this important area. And in the spirit of Congressman Hill's comments and questions, I would like to ask further, as we are all aware, the multilateral development banks are sitting on enormous equity and from loan repayments and to the tune of hundreds of billions of dollars. And, you know, these loans were made initially from appropriations by the Congress. Do these MBD shareholders, do they have a claim to that equity? And if so, if the loans are repaid back to the banks, should the proceeds go back to the Treasury, especially when the U.S. does have this $20 trillion debt?
Congressman, so the U.S. as a shareholder does hold equity in the institution. Frankly, one of the things that has enabled the World Bank to be effective over many years and has lessened the burden on U.S. contributions over the years is that the bank can retain that equity, that the proceeds on loans have actually allowed it to grow without coming back and asking for more capital on a routine basis.
I respect that then. If that's true, then why should Congress keep appropriating additional dollars?
That's a fair question. So it's important to recognize there are different channels of financing within the institution. The so-called IDA is the arm of the bank that is serving the very poorest countries. Because it's serving the poorest countries, the lending that it does is highly subsidized. That subsidy is something that over the years, donors to the bank, with the U.S. really in the lead, I would say, they agree every 3 years to provide that. I think it's important, and we're talking about, essentially about $1.3 billion a year from the United States. I would never say that is an insignificant amount of money. It's real money.
It's not.
On the other hand, let's put it in context in terms of even the overall foreign assistance budget we have of roughly $30 billion a year. I think that 1.3 actually gets us quite a lot in actual
I understand that,
programs.
sir. And if anyone else wants to chime in, they can. But in context then, let's view the Pan-African Union. Many of these countries are members of the Pan-African Union. I have many ambassadors who come into my office and tell me the pressure that they have to vote against the interests of the United States in the UN and in our interest. How do you bring that into a clear focus in terms of our American interest? I appreciate the work that we can do for the needs throughout the world, and I'm very sensitive to that. I've traveled extensively back for 40 years when I served with a Christian organization and spent a lot of time in Africa, so I'm not unaware of the concerns. But I do, in this job, have a responsibility to the American people, the American taxpayer. And in that regard, how do you balance that when time and again, year after year, decade after decade, the Pan-African Union as a whole votes against us on a pretty consistent basis in the United Nations? Anyone would like to respond to that? I don't blame you.
Congressman, if you don't mind, I'll come in again, but I would say, it's important to look at each of these countries, and for the U.S., its relationship directly with each of the countries. You're absolutely right. There will be cases where the World Bank is engaged in countries where we have real concerns. I would say even in those situations, I think there is some value in the work that the World Bank is doing without us being directly associated with it, that over the longer term, it is the channel for U.S. influence. Particularly if they find ways to do effective projects.
I do reclaim my time. I do think, though, we have a responsibility to this sovereign country to preserve our interest and to make sure that assets that we participate with work in our behalf. And the UN certainly has not been a friend of our country for a long time, and the Pan-African Union has certainly been part of that. I would like to ask Mr. Chafkin, if I could, do you see any oversight process that we could have to prevent and deter some of the human rights issues that you conveyed today? What more could be done, and how should that fit into our worldview of the World Bank?
I would point to two areas. One is to ensure closer scrutiny of individual projects as voted on by the United States Executive Director. Often when the United States Executive Director has concerns, they will abstain from a vote.
The gentleman's time has expired. I'll let you just finish your thought really quickly.
Okay, thank you. And the second is to ensure independent oversight structures within the World Bank, both safeguards specialists and the inspection panel remaining independent and having direct lines to bank management without being forced to go through operations or task team leaders and projects.
Thank you.
Thank you, sir. My time has expired.
Thank you. The gentleman's time has expired, and now the chair recognizes the gentleman from California, Mr. Sherman.
One of the most important things America does with our tax money is our foreign aid program. And particularly in the new administration, we have to make sure that those dollars, which will become even more scarce, are spent in the most effective way. Those claiming that the World Bank is the most effective way always argue for the multiplier effect. Hey, we put in $1 and $4 other dollars from other countries comes in. Of course, other foreign aid programs also have a multiplier effect. If we announce that we'll spend another $1 billion on malaria relief and eradication, I believe we could cajole other wealthy countries to put in similar amounts, perhaps just as great a multiplier effect. But putting aside the multiplier effect, or understanding that all of our foreign aid can be used to generate a multiplier effect, I wonder if the witnesses can identify any better use of our foreign aid dollars than a contribution to the World Bank. I'll go through that. Yes, go ahead.
Not exactly an answer to your question, but I want to raise the issue.
Well, I've got a limited amount of time. If somebody doesn't have an answer to my question, I'll move on to another question.
It's related to your question, but it has to do with the research department at the bank, which I believe is one of the finest research departments in development economics.
But how do we weigh putting money in, contributing to the bank, as opposed to health programs dealing with malaria? We could
Okay,
put more
I have
money
a-
in the bank. Does anybody have a
It's
comparison?
directly relevant to
Mr.
that.
Morse, but I've got to go on to another question.
Yeah, Congressman, I think, I mean, there's a question of trade-offs, and it's a concern right now when the foreign assistance budget broadly is under attack in what we saw coming from the administration. I think it's important to recognize we have a diverse toolkit. All of the parts of our foreign assistance budget.
I know we have adverse.
The other thing I would say is that
I'm going to reclaim my time because I want to go on to the
World Bank is hugely important.
Mr. Morris, I'm going to reclaim my time because one of the gentleman from North Carolina pointed out that one of the disadvantages of dealing with the bank is that we don't get to pick which countries get the money. Now, he's concerned with countries that vote against us in the UN. I'm concerned with countries that are developing nuclear weapons for the purpose of destroying millions of Americans' lives. I've been working on these issues for 20 years, and in 2002, we were told here in Congress that loans would not be made to Iran, and then they were. And then we were told it wouldn't be happening again, and then it happened again. And we were told that the United States had the veto power to prevent such loans, and then we didn't. The question here is, can we condition our future contributions to the World Bank on having a U.S. veto power on further loans to Iran? Does anyone have an answer? Mr. Morris.
Frankly, I don't think you can legislate that. I think
Sure we can. We can say no money shall be dispersed to the World Bank until the World Bank changes its rules so that the United States has an absolute veto power on further advances to Iran.
with the threat of, you're absolutely with the threat of
The question is, should we put that
But you
in-
cannot, the rules of the institution do not. afford
Okay,
the US.
the question before us here is, should we put that as a condition on the disbursement of American funds?
I think you're right. It is perfectly legitimate in cases like Iran where the U.S. has very clear interests to express those interests very clearly with the bank and expect.
What would be the does another witness have a comment? What would be the reaction of the bank if our next tranche of funds was conditioned on a change of bank rules that would give the United States a veto power on or prevent a further loans to Iran? Does any panel what would be the response of the bank? Would we get the change, or would they say keep your money? Nobody has an answer? Because I know the World Bank is adhering to UN sanctions on Iran, but none of those currently prevent further loans to Iran. The World Bank has promised Congress again and again, or supporters of the World Bank have promised Congress again and again it wouldn't happen, and that happened. So,
Congressman,
Yep.
and you can correct me if I'm wrong, but I do believe that the last actual lending was
was several years ago,
during the Bush
and you can be
administration.
sure that such loans will resume in the future unless Congress takes a strong act. And I'm not saying that necessarily happens this year or next year, but if we don't act now, the culture at the World Bank is oblivious to Iran's nuclear weapons program. I yield back.
Thank you. The gentleman's time has expired, and I thank the gentleman for his good line of questioning there. I'd like to thank also our witnesses for their testimony today, and without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witness for their response. I ask our witnesses to please respond as promptly as you are able. This hearing is now adjourned.